Do not be that investor. Don't do that. What is happening, DeRosa Insiders community? This is Matt Faircloth, and welcome to the DeRosa Insiders live program. So here's what's going on with interest rates. And this is how I wanted to teach you guys about how to play interest rates in your real estate investing business. Because some of you guys might have watched this video thinking like, oh, rates are coming down, maybe I should hop in. Or rates are just begun to come down, and I'm going to sit on the fence and wait, right? I'm going to talk to you in this video about what you guys can do today to properly play the falling rate environment. We've been in a rising rate environment for the last 2 years. And some would say we're in a deducting or a falling rate environment, right? Now, here's a few tips I want to give you guys, and I'm going to give you guys some real investing strategies that we at DeRosa, and we control thousands of units of multifamily, and I'll tell you what we are doing going into this potentially falling rate environment, and perhaps you can take some of that home, right? Number one, my crystal ball is broken. I do not know if the Fed will drop rates. Today, this video is being shot in October of 2024, and going into 2024, the Fed said that they were going to drop rates 4 times this year. They haven't. They decided to change their mind, as people sometimes do. And some people might think that the Fed is going to drop rates more, but what if they don't? What if the magic inflation boogeyman comes back and they raise rates again? They could, right? All we know for a fact is rates are what they are today, okay? That's number one. And I don't want you guys to make investing bets, let's say, because this is what it would be, speculating for rates to fall. Now, they might. And some of the very smart people that I follow in the world think that they will, and they probably will. But like I said, my crystal ball is in the shop, okay? And nobody really knows what the Fed's going to do with regards to rates. They could possibly keep rates where they are for a while, right? And if that happens, if you buy a deal that works with rates here, and rates are currently above that, and you think if rates fall, the deal I'm buying today, I can refinance at tomorrow's rates and it'll be screaming hot. Then I'll just lose a little bit of money per month at today's rates until I can refi into a lower interest rate. Do not be that investor. Don't do that. You're really gambling. You are speculating as to what rates could do, and you're making bets at what rates are in the future. For example, let's say 4% is the interest rate you need to see to make your multifamily investment deal work, okay? And money is currently around 6 today in October of 2024 for small to mid-sized multifamily. If that's the case, then the deal you've got that only works at a 4% interest rate maybe doesn't work. So the bottom line, guys, is going into a falling rate environment, if you buy deals that work today and rates go down, that deal only gets better. Okay. So the bottom line that I want you guys to take in is, if you guys do deals at today's cash flow projections, at what today's interest rates are, borrow money for today. Don't buy a deal hoping that it'll make sense tomorrow, right? If it makes sense today and rates get better, your deal just got better. If the rates get worse, thankfully, you bought them at today's rates and you're still in a better position, right? So that's my tip for the day, guys, with regards to interest rates. Yes, they may come down, but buy at today's rates. Now, the carve out, the caveat, the optimist in me, I'm a bleeding optimist. I love thinking positively. And so if you are an optimist like me, here's what you want to do. You want to buy at today's rates, but don't put a 10-year lock on your interest rates, or buy a deal that you can't refinance, maybe it's protected by Fannie or Freddie, or there's a ginormous prepayment penalty to get out of the deal. Don't do deals where you're handcuffed to today's interest rates. Give yourself that flexibility that if, knock on wood, rates do go down, you can refinance into a lower interest rate in the future, so you have that freedom. But at least you are locked in and non-floating at today's interest rate. So that's my tip, is if rates go down, maybe accept a 1 or 2% prepayment penalty to refinance, but nothing super big, or a loan term that's maybe 5 years, 3 years, something like that. So if rates go down, you can enjoy a lower interest rate. So that's the optimist in me speaking. That's what we are doing here at DeRosa, is we are doing fixed rate debt but we're doing debt that doesn't, it's not too long of a time horizon, so that if things get a little bit better, we can refi to something lower and enjoy more cash flow. That's what I got for you guys on what to do in a falling rate environment and how to invest and make deals work today. All right. Hope you enjoy, guys. If you guys like what we have here on this YouTube channel, make sure you like this video and subscribe to this channel. Thanks, guys.